Apple recently made history, becoming the first US company to break the $1 trillion market cap barrier, beating out Amazon, Google, and Microsoft to the punch. And so the question remains, should you still buy Apple stock? Let's find out. What's up, everybody? My name is Ale. Welcome to my world of finance. Lately, you guys have been hitting the like button a lot on my videos, and to tell you the truth, it's really been helping the channel survive, so please continue to do that. It really means a lot to me. Also, don't forget to leave a comment down below for Ale's World Consensus. Let me know if you're bullish, bearish, or neutral on Apple stock, ticker symbol AAPL. I'll tally up the results, and I'll have that for you guys in a future video. Previously, we looked at Applied Materials, ticker symbol AMAT, and 7 subscribers voted, and out of those 7 amateur analysts, 100% of them voted bullish on Applied Materials stock. So maybe Applied Materials is a stock that you guys should check out as well. I have my video review right up here and in the description below. But with all that being said, let's go ahead and get started. Now, we mentioned that Apple is the first US company to break that $1 trillion barrier, but there's actually another company called PetroChina, which is like an oil and gas producer, and they actually broke the record back in 2007 on the Shanghai Stock Exchange. But I think as of now, they're down about 80%. So hopefully history doesn't repeat itself with Apple stock. All right, now Apple has already had a fantastic 2017, up around 45% or so. And then this year to date, they're up another 20% or so. So I think it's safe to say that the stock has really been on fire lately. Their latest earnings was also very strong, and it really gave them the last push that they needed to break that $1 trillion market cap barrier. Now, speaking of their earnings, they reported fantastic Q3 earnings just this week. Revenue was up 17% year over year, and their EPS was also up 40% year over year, so both categories easily beating estimates. And when looking at Apple's different segments like iPhone, services, and their other products combined into that other category, they've all seen improved performance year over year as well. iPhone sales, in terms of like unit sales, were only up around 1%, but iPhone revenue was up 19%. And the reason why is because the iPhone is just much more expensive now. When looking at their latest flagship, the iPhone 10, that phone retails for around $1,000 per phone, which is pretty expensive considering that I purchased my OnePlus 5, which is an Android phone, for around $500, and that has 8 gigs of RAM. So it's a pretty strong, pretty powerful phone, and I only paid around $500. The iPhone 10, it's practically double that. So the iPhone is pretty expensive right now. In fact, when looking at the average sale price for iPhones, this latest quarter, it was at $724. A year ago in the same quarter, that was as low as $600, around $600. So you can see that the average sale price increasing really helped them with their revenue. And when looking at Apple services, sales were up around 31% year over year, and that equates to around 18% of Apple's total revenue. So you can see that even though iPhones are still very important in terms of Apple's core business, they are taking the necessary steps to grow other parts of their business as well. In fact, looking at Apple's other product segment that includes Beats, AirPods, HomePod, and Apple Watch, that grew around 37% year over year and equates to around 7% of Apple's total revenue. And that's despite the fact that HomePod had a bit of a rough start, and it operates in a market that has a lot of heavy competition from Amazon and Google. And then when looking at Apple Watch, that continues to be the highest selling wearable in the world. Now, something that I think a lot of people don't really talk about when looking at Apple stock is that they pay out a very nice dividend, and I think more people should talk about it, but I think the reason they don't is because the yield is pretty low at less than 2%. I think currently it's at around 1.5%, but the real reason for that is just because the stock has been climbing so much. But investors that got in on Apple stock early are seeing great dividend returns, and Apple has been increasing their dividend payments for years. You can see that right over here, and in their last quarter, they actually increased their dividend by around 16%, bringing it up to around 73 cents per quarter per share. And when looking at the payout ratio, that's less than 25%. So that means that out of all of Apple's insane profits, they only pay out less than 25% of that in the form of dividends. So what that tells me is that they have plenty of room to keep growing those dividend payouts in the future and in the years to come. In fact, I've often thought about adding Apple stock to my dividend growth portfolio, but the only reason I haven't is because their stock is a bit pricey at the moment, and I just feel like there are maybe some better options out there. But that doesn't mean that I'm not bullish on Apple. For everything that Apple has done already, I still think that they have some pretty decent amount of room to grow as well. In fact, how many times have we talked about Apple stock on this channel? And I've said it many times that I feel like Apple has already done a lot in the United States, and that doesn't mean that the cash flow is going to stop coming in, but I'm just saying that they really needed to look internationally for future growth and to keep those growth investors happy. Well, in this latest quarter, Apple actually announced that 60% of their total revenue actually comes from overseas. I think that that is just fantastic, exactly what Apple needs to be a little more diverse. And I 100% fully expect that percentage to grow quite a bit more in the coming years. In fact, revenue from China alone, which by the way is a huge market that they can definitely benefit from, grew by 19%. That's actually a faster rate than the 17% that they announced for the company as a whole. So I really think that we will continue to see money pouring in the United States, but we will also see tons of international growth as well. And so all of that cash flow can really be used for three main purposes the way I see it. One would be to definitely continue to build out their platforms and infrastructure so that we can continue to grow revenue from services. And yes, there is a chance that we might see hardware sales slow down, but even internationally, I think there is still room to grow there as well. But the thing is that with every single product that Apple sells, I think that that's just one more opportunity to get a customer hooked on the Apple ecosystem. In fact, every time that I ask my friends why they purchase Apple products because they're so expensive and a lot of times there's cheaper alternatives, they almost always give me the same answers. They either say that they really like the high performance and high quality of Apple's products, or they say that they are just too invested in Apple's ecosystem to really switch to a different platform like PC or like Android. And so I really feel like if Apple can continue to make these really high quality products at high prices, that will also bring in higher revenue, kind of like what we're seeing with the iPhone X. And if they attach lots of services and a whole ecosystem with those products, then that's just even more money pouring in. And that leads me to number two, which is that if this money keeps pouring in, then they can use that money to pay out higher dividends. And so I really think that they will continue to grow their dividends, and that will attract dividend growth investors kind of like myself. And number three is that they could use the rest of that money to strengthen their balance sheet, which makes them much more capable of acquiring other companies in the future or reinvesting in themselves. But either way you look at it, more cash flow should equal more expansion and future growth, which should satisfy growth investors as well. But also, if they're just strengthening their balance sheet, that might also please value investors as well. And I'm not the only one who's bullish on Apple stock. In fact, Apple themselves continue to claim that their stock is undervalued, and they continue to put their money where their mouth is. In fact, this latest quarter, they actually bought back another $20 billion of Apple stock. So not only does Apple have a long history of buying back stock and reducing their outstanding shares by over 20% in the last 5 years, which you can see in this chart right over here, but this newest buyback should actually reduce that even further. On top of that, the legendary Warren Buffett, who's the CEO of Berkshire Hathaway, recently announced that their company was buying even more Apple stock, equating to them owning around 5% of the company. So in conclusion, I do really like Apple stock, and I wouldn't even mind picking them up as an addition to my dividend growth portfolio. But the thing is that my fourth largest stock is Taiwan Semiconductor, and one of their biggest customers is Apple. So I'm kind of already indirectly invested in Apple the way I see it. So that's probably why I won't be picking up more of Apple stock. By the way, if you want to see my review of Taiwan Semiconductor, you can find it up here or in the description below. On top of that, I do kind of feel like there are some better options out there. And even if I was going to pick up a really giant blue chip stock, I kind of like Google, Microsoft, and Amazon a little bit more, although you could definitely make the argument that Apple stock is a bit cheaper than all of those. In fact, when looking at PE ratios, these are from CNNmoney.com, Apple is at around 20, Google is at over 50, Microsoft is at over 70, and Amazon is the highest at over 140. And I should probably mention that my girlfriend is heavily invested in Apple. In fact, it's one of her biggest positions, but I don't think that she'll be selling anytime soon, even though she would probably want to cash in some of her profits. I think the fact that they pay a dividend and that dividend is growing, and there is still a lot of potential for Apple to just continue to improve, especially internationally, and they're just making so much money as it is. I think that she'll probably hold on to Apple stock for several years to come. But listen guys, anything can happen in the short term, and when looking at some of these giant companies that have already grown so much and they dominate so much of these different markets, you have to be a little cautious because I'm not saying that they can't continue to grow, but sometimes the rate of growth kind of slows down a little bit. And when that happens, a lot of these stocks get hammered. I mean, we've been in a bull market for so long, and a lot of these companies have just been doing so well for so long that, sometimes the rate of growth can kind of slow down a little bit. We saw that recently with Facebook, where they came out with earnings and it wasn't amazing. They didn't have amazing earnings, and so the stock got hammered and it dropped like 20% in one day. So I'm just saying, be a little cautious with Apple. But with that being said, overall I am definitely bullish on Apple and I do like them. I'm not picking them up yet, but it's one of my girlfriend's biggest positions, and I'm also invested in Taiwan Semiconductor, which is kind of an indirect play on Apple. So overall, I am still bullish on Apple stock. But who cares what I think? It matters what you guys think. So make sure you leave a comment down below. Let me know if you're bullish, bearish, or neutral on Apple stock. I'll tally up the results and I'll have that for you guys in a future video. Don't forget to like, subscribe. Thank you so much for watching, and I hope that you all have a wonderful, beautiful day and that you take care. Bye.